Well, as we heard earlier, unless it can raise billions of dollars, analysts say commercial lender CIT has few options other than bankruptcy. With me this morning to discuss CIT is Angela Summers, Senior Counsel at Allen Overy. She heads the firm's restructuring practice. Thank you for coming in this morning. We haven't seen a financial bankruptcy quite like this recently. Not a broker-dealer. It can file Chapter 11, but it's not a bank, so there's no government backstop here.
Yes, this is not a company that's going to do well in bankruptcy at all. It's basically going to be a liquidating 11. There are very few precedences really to look to. Perhaps Finova and some of the Alt-A and subprime companies, and none of them have done well in Chapter 11 in terms of truly restructuring and not being a sale of various groups of their assets.
You don't think there's much chance of any other lender offering them debtor-in-possession financing to try to get them into a restructuring?
There could be. There could be some limited financing with a promise to sell groups of assets to that lender. That's a popular strategy move of some of the distressed financiers today, and that might be an option for them.
But Angela, is it a foregone conclusion that the government would need to be involved for whatever solution there is?
Well, it's likely, and you know we have a lot of tools in our arsenal today, and I think we've taken some tips from GM and from Chrysler. We have this quick 363 sale now that really was unprecedented, and they could try something like that with a DIP financing, a spin out of certain assets to a new co, like we've seen done, and that would preserve part of the business, that the profitable part of the business. They still obviously have a funding problem, but if the new purchaser could address that, that would be a way of preserving some of their value.
But if, as you say, they are headed to liquidation, what's the obligation of the court in this case? In this situation, there's almost no real assets.
Right. Well, that is certainly the problem, and that's what we saw in some of the Alt-A and subprime cases. They really just wholesale split up their parts of the business and sold them off. They try to congregate groups of loans and financing and spin those off into somebody who would pay for them, but there's very little there at the end of the day sometimes.
What happens to CIT's borrowers? Does the court require immediate repayment on loans, or how does that work?
Well, that's going to be a very tricky thing. I just really don't think that's very feasible, and I think that's too taxing to the borrower, so they're going to have to think of some solution to address that problem.
Treasury gave them $2.3 billion of our dollars, taxpayer dollars, in TARP funds. Where do taxpayers stand in the creditor line here?
Not in a very good position, and I don't think they'll get much of a return on that at all. I think it's much too sorry a situation.
Does anybody get much return in this case?
Oh, well, I think there is some value there. I think that can't be overlooked, and there are groups of businesses that will be pooled and spun off, and there will be some compensation for that, certainly.
Now, is there any way to handle the fact that some lenders rely on this company? Will we see, as we did with Lehman, any credit lines frozen, and all of a sudden people who are expecting payments aren't going to get them?
Certainly. I mean, this is going to really hurt many small and medium-sized businesses. It's going to be monumental for them. If certain parts of the business are spun off, perhaps the pain can be softened a bit for that group of people. But this is not a good situation. Once they go in, it's bad for both the lender and the borrower, and that's why it just becomes an 11 and not a very hopeful reorganization.
So on a scale of 1 to 10, some of their clients would be, say, an 8 for leaving quickly. I mean, we've talked about Eddie Bauer, Duncan Brands. I mean, there's a lot of names that we know.
Right, and I don't think it's not like a GM where somebody might really want to buy that car. They're asking for money. They're getting financing. Hopefully they can go elsewhere and get it. And so CIT, in that sense, I mean, they do have a unique product, but if people can go elsewhere for that financing, certainly they will, and not seek to, stumble along with a financer like this.
Well, you mentioned GM. The administration certainly upended bankruptcy law with the Chrysler and GM deals. Any precedents set in those cases that might apply here?
A lot of precedent. I mean, I think the main thing was that people really didn't think you could spin out an asset like this and determine who was going to get the compensation. And what the case law said was, well, the compensation really wasn't determined. That was a completely separate deal. We spun the assets off, money came into the estate, and what we do with that new company had nothing to do with the bankruptcy. But the reality is the old creditors suddenly became creditors of the new company. So it was a very artful way of, getting through the law, but at the same time getting around it.
Normally the judge has the right to set who gets what.
Yes, exactly, in a plan where everyone votes, and that was really what they circumvented, the primary, new development there.
All right, we will continue to watch CIT. Thank you very much.
Thank
Angela
you.
Summers, Senior Counsel at Allen Overy, for coming in this morning.